Institutional capital is flooding into crypto, but not where you think. They're flipping memes just like the rest of us, but in parallel private markets that are opaque to you and I. Well, not anymore. One of crypto's biggest market makers reveals all in a new report about how institutional OTC crypto trading exploded in 2024. Stick around to find out what, where, and how institutional investors are trading, plus key predictions about how they could transform crypto in 2025. My name is Nick. Lock in. Today's report is from none other than Wintermute. And if you're not familiar, Wintermute is one of the most important players in the crypto market. It's one of crypto's biggest market makers, providing liquidity to every corner of the cryptoverse, from decentralized exchanges to institutional over-the-counter or OTC trading, and of course, CEXs too. I mean centralized exchanges. Today, we'll be focusing on Wintermute's OTC desk rather than the market-making business. Now, OTC, or over-the-counter crypto trading, is of interest to us because it's that aforementioned parallel and opaque crypto market where institutions and the very biggest crypto whales execute their trades. The main reason for trading OTC is the massive size of the trades involved. Let me put it this way. If Michael Saylor logs into Binance and tries to market buy $1 billion of BTC at $100,000, the order will not be filled in an orderly and efficient manner. A $1 billion buy order would melt through the supply of BTC on the order book, resulting in an average purchase price significantly higher than $100,000. This would produce an enormous green candle on the chart, representing not just Saylor's $1 billion buy, but also a liquidation event as his buy pressure squeezes shorts out of their positions, triggering forced buying. Orders of this magnitude leave a conspicuous footprint on the market for all of the world to see. And this isn't ideal for institutional investors who don't want to create a spectacle every time they take a trade. OTC markets solve this problem by facilitating large transactions between institutional investors discreetly and without moving crypto prices on the public market. So you can imagine our excitement when we saw that Wintermute shared a report full of data from this normally impenetrable market for institutional crypto trading. The report uses data from Wintermute's own OTC desk to identify how institutional crypto trading changed in 2024 and predict what key developments will shape the market in 2025. Let's start with the trends that defined 2024. And if we could give you a one-word summary, it would be expansion. Basically, every metric in this report points to more demand for crypto from institutions. Of course, we already knew this was true anecdotally. We spent all of last year making videos about how TradFi institutions and governments were getting their feet wet in crypto. However, it's not every day that you get to see this trend borne out in exchange data from the private OTC desks used by institutional investors. Let's put it this way, you won't find Wintermute on CoinMarketCap or CoinGecko, that's for sure. At the top of the report, Wintermute reveals that its OTC trading volumes more than quadrupled in 2024. Yes, more than quadrupled. And that is absolutely bonkers and a much faster rate of increase than the overall crypto exchange market, where trading volumes only increased by 142%. The report highlights how volume growth was signposted by certain key events, and no prizes for guessing what it's talking about. The SEC's approval of spot Bitcoin ETFs in January and the election of Donald Trump in November had Wintermute's OTC desk on fire, with volumes reaching new all-time highs. Previously, Wintermute had recorded its highest ever OTC trading volume of $2 billion in a single week in 2023. That record was smashed in November 2024, and not by a busier week, but by a single day of trading volume, which saw $2.24 billion in volume. The growing demand for placing big bets is also borne out in the average trade size on Wintermute's OTC desk, which grew 17% year on year. Counterparties were trading much more frequently too, with the number of trades increasing by 250% in 2024. We also were interested to learn how expansive Wintermute's asset support is. It grew by 64% in 2024 from 576 to 946 unique trading pairs. This is a pretty huge number, and it reminds us that the category institutional investor is not at all homogeneous. It encompasses market participants of various different sizes and risk appetites, including, I suppose, institutional buyers of shitcoins. And if you think I'm kidding, then you're going to love the next graph I've got for you. Wintermute broke down its OTC spot trading volume from TradFi institutions specifically by asset sector. We can see that cryptos filed under media, arts, and entertainment, which calls to mind the metaverse, lost a lot of mindshare last year, with OTC volume down 50%. Layer 2s also suffered, with volume down 18%. However, DeFi was up 18%, no doubt buoyed by the slaying of Gary Gensler's SEC and the election of DeFi founder Donald Trump to the presidency. Then there is the category currency networks, which you can take to mean XRP and XLM, and their trading volume increased by 20% in 2024. Now, this is all very interesting, but what's this big green candle over here? Ah, of course, memes. OTC trading volume of meme coins by TradFi institutions grew by 210% year on year. 2024 was truly the year of meme coins, and just as we always said, institutions are absolutely feeling the FOMO. Wintermute also shows us how money flooding into meme coins ate away at major cryptos' share of Wintermute's OTC spot trading volume, which fell from 67.9% in 2023 to 58.7% in 2024. Interestingly, the share of volume accounted for by altcoins, here meaning non-majors and non-meme coins, held steady, barely budging from around 25%. Meanwhile, meme coins' share of trading volume increased from 7.3% to 16.2% of total Wintermute OTC volumes. Overall, the trend is pretty straightforward, a movement of institutional capital from the least risky categories to the very riskiest. And this is peak bull market energy, and it's a reminder that wherever we are in the current cycle, it's definitely not the beginning. The report also breaks down Wintermute's OTC spot meme coin volume by meme. Here we can see that the incumbents Doge and SHIB represented the vast majority of meme coins volume at Wintermute at 53.6% and 34.6% respectively. And this is down from 62.5% and 36.2% in 2023. The reduction is accounted for by the rise of other memes in 2024, most notably Pepe, whose trading volume rose from 1.2% in 2023 to 9% in 2024. Interestingly, WIF and other, meaning every other meme coin, accounted for just 1.4% of meme coin trading volume each in 2024. This tells us that while institutions are indeed buying meme coins, they're very discerning about it. I guess we shouldn't be surprised to see them betting on blue chips instead of scraping the bottom of the deck screener barrel and getting rugged. Still, it makes us wonder about the 370 unique trading pairs added by Wintermute last year. I can only assume this includes a bunch of newer memes and other small caps, but based on Wintermute's OTC volume data, it looks like there is very little interest in trading them. This conservative tendency is also clear from the Wintermute breakdown of OTC spot meme coin volume by ecosystem. Unsurprisingly, Solana witnessed explosive growth from 2023 to 2024. To be precise, its share of OTC spot meme coin volume 17x'd in the last year. It's pretty crazy stuff. And yet, Solana still accounts for just 5.1% of OTC spot meme coin trading, compared to Ethereum's 94.7%. And this really puts things into perspective. Sentiment around Ethereum has been abysmal for at least a year now, but it is still extremely dominant, at least when it comes to institutional meme coin portfolios. The optimistic take here is that Ethereum is doing just fine. It's still king, and its first mover advantage is a moat so big that no competitor can pose a serious threat. On the other hand, though, a pessimist would say that institutional meme coin preferences are a lagging indicator, and Ethereum has a very, very long way to fall from here.
Oh, sorry, I just had to take a break from that video to check the Coin Bureau deals page. You know, the one place you'll go to get exchange sign-up bonuses of up to $100,000. and trading fee discounts of up to 70%? Or how about discounts on hardware wallets, as well as exclusive altcoin alpha in the Coin Bureau Club? Well, more information in the description. Now, back to the video.
Next, the report turns to Wintermute's derivatives offerings, which expanded in 2024 in response to demand from institutional investors for leveraged exposure to crypto. And the report details how Wintermute's new CFD products accounted for 4.3% of total OTC trading volume just 9 months after launch. Now, I know what you're thinking. Nick, what the heck is a CFD? It sounds contagious. Well, not to fear. A CFD, or contract for difference, is just another financial derivative, like futures and options. For regulatory purposes, CFDs are their own class of derivative, but in fact, they actually bear an uncanny resemblance to perpetual futures contracts that we all know and love. Like perps, CFDs allow you to make a leveraged directional bet on the price of an asset and profit in the event that the price moves in your favor. The contract is settled in cash, and at no point do you hold the underlying asset. CFDs have no expiration date, so positions can be held open indefinitely. Keeping a position open may incur fees, but unlike perps, there is no funding mechanism involved. What sets CFDs apart, at least in the OTC market, is their customizability. I like to think of CFDs as a bespoke perps for institutions, where the broker and the counterparty negotiate in advance specific margin requirements or risk parameters. Wintermute OTC CFDs were launched in March and spent the next 2 quarters accounting for less than 1% of total Wintermute OTC volumes. This suddenly ramped up to 4.3% in Q4, no doubt reflecting a thirst for leverage after Donald Trump's election victory in November. Turning to the composition of CFD activity, we can see that BTC is dominant, accounting for 68.2% of Wintermute's OTC CFD volume. No surprises there. ETH delivered a shocker though, because not only is it not in second place, it barely scraped third. XRP is in second place with 15.3% of volume, while ETH at 7% is only a hair ahead of Solana at 6.9%. Interestingly, the Bitcoin Cash's BCH is next, accounting for 1.9% of volume, while all other cryptos put together made up just 0.7%. The overall growth in CFD activity is quite significant when you consider how much Wintermute's overall OTC volume grew last year. However, if we can consider CFDs as analogous to perpetual futures contracts in the public crypto markets, 4.3% is a remarkably small proportion of overall trading volume. The reason I say this is because most of the trading volume on centralized crypto exchanges is generated by highly levered perps traders. So then, why are the volumes from Wintermute's OTC leveraged CFD products still so small compared to overall OTC volumes? Maybe it's just because Wintermute's CFDs are still relatively new. They only launched in March of last year. And if the current trend continues, their share of overall volume will increase. But this might also tell us something about how leverage is used by institutional investors versus by retail traders. For many retail traders, leverage is a means of playing with otherwise unthinkable sums of money. This is a misunderstanding of the purpose of leverage. Leverage is not supposed to define your position size. You are supposed to determine an appropriate size, and leverage merely determines how little capital you can use to achieve that size. Institutions understand this and use leverage for the purposes of capital efficiency and managing counterparty risk. And this implies a lower degree of leverage, because the more levered a position is, the more at risk of liquidation it is, and this defeats the purpose of using leverage as a risk management tool. Next, the report turns to Wintermute's OTC options, whose volume grew by 257% year-on-year. And this growth is notably outsized compared to overall crypto exchange options volumes. The report explains that this reflects institutional demand for bespoke strategies, which is kind of the whole point of trading options OTC rather than on exchanges. Options are still quite unfamiliar to many participants in the crypto markets, but as TradFi and crypto continues to converge, we expect demand for options to see strong growth. Some have even argued that BTC options are going to trigger something akin to an indefinite bid that causes prices to explode to the upside. And if you want to find out why, well, we made a video all about that, linked to right over here. Now, the remainder of the report is filled with Wintermute's key predictions for the year ahead in crypto. And a spoiler alert, there are no price predictions. It's not that type of report, unfortunately. Still, it's the start of what should be a very big year for crypto, so let's check out the highlights. The first prediction will be familiar. Quote, the US will begin consultations to create a strategic Bitcoin reserve. China, UAE, and Europe will be forced to follow. For our full take on this, check out our recent video on global SBR adoption that will also be linked to in the description. But at the time of making this video, the Trump administration's position is very much we'll look into it and not we're beginning consultations to create it. Big difference there. Presumably, it wouldn't be very difficult for the federal government to start calling its existing BTC holdings strategic assets. They could do that. Voila, there you've got your strategic Bitcoin reserve. But the real question is, will they actually start buying BTC on the taxpayer's dollar? Possibly, but it's a much, much bigger ask. If this does happen, the question of other countries following is an interesting one. Frankly, the UAE probably won't need much persuading. China and the European Union, though, are a different story because they have historically taken a fairly dim view of crypto. Unless there is a change in leadership, we don't expect them to capitulate immediately upon receiving news of the US buying BTC. It may take some additional shock from the fiat currency system, perhaps stemming from sovereign debt crises, to persuade the EU and China of Bitcoin's value. We'll add that Russia should be on this list too. Russia is expected to scale up its use of BTC for trade settlement in 2025, and this kind of adoption could quite easily foreshadow the government stockpiling BTC. Wintermute's second prediction is a little more fresh. Quote, a listed corporation will issue debt or shares to acquire Ethereum, #MSTR 2.0. This is kind of a contradiction in terms, because Michael Saylor's whole shtick is that there is no second best crypto. Still, if we consider it a possibility, then the question becomes, wouldn't it be ETH? Obviously, it's the second largest crypto by market cap, but the sentiment is so dire at the moment that it's difficult to picture Michael Saylor but for ETH. Maybe we should return to this prediction once ETH has broken the sell wall at $4,000 and sentiment is back above sea level. The next prediction is related to stablecoin adoption, and adoption by big businesses to be exact. Quote, a large corporate event, dividend acquisition merger, will be completed and settled in stablecoins. We could see this happening, especially if at least one of the companies involved is a crypto or Web3 company. So, for example, for Circle or Coinbase, there would be significant symbolic value in doing something like this. And if the corporate event is distributing dividends to shareholders, we can see the practical benefit of settling it in stablecoins on-chain. Mergers and acquisitions are quite a different story, though, and it's not clear to us if they are hampered by problems that are begging to be solved by stablecoins. Perhaps we're missing something, but we think widespread acceptance of stablecoin payments in the US would be a much more salient milestone. Next up, Wintermute predicts, quote, a core asset manager will launch a Memecoin ETF. Our money's on #Doge. Round of applause, please, everybody. In late January, Wintermute filed a registration with the SEC to create a Dogecoin ETF. Days later, Grayscale announced the creation and launch of its new Dogecoin Trust, although it's not clear if this is intended as a stepping stone towards a Grayscale Dogecoin ETF. At any rate, we think this prediction is as good as fulfilled. We do have mixed feelings about this, though, simply because this is the kind of silly news that tends to come out around cycle tops. If the bear market starts tomorrow, I'm blaming Bitwise and Grayscale. Jokes aside, the final prediction we'll highlight from Wintermute's report is that a, quote, systemically important bank will offer spot cryptocurrency trading to clients. This would break down a huge barrier that exists between crypto and TradFi at the moment and enable seamless balancing of crypto risk against equities in institutional portfolios. We think this is very likely. In late January, the House of Representatives launched an investigation into Operation Choke Point 2.0, in which the US crypto industry was systemically shut out of the banking system. Days later, Federal Reserve Chair Jerome Powell commented at an FOMC meeting, quote, "Banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. All in all, it's looking very good for US crypto firms in need of banking services." So, Wintermute's report paints a vivid picture of the boom in OTC crypto trading by institutions in 2024 and the remarkably bullish market posture that we're facing as 2025 starts to heat up. We used to dream of times like these, so it's really worth taking a moment to appreciate just how far crypto has come. Let's just hope that macro conditions will continue to cooperate so that the bear market doesn't arrive too quickly and spoil all our fun. Now, if you enjoyed that video, you can watch our latest one right over here. And if you're not subscribed to the channel yet, you can do that right over here. That's me for now, and I'll see you next time.